Good morning, everyone. Happy Wednesday. It's about 7:15 a.m. in the morning here on the east coast of the U.S. and prices of BTC are currently at 11,281. It looks like we did break out of this falling wedge. So we're on the 2-hour time frame here, and I'm looking at Bitstamp. So prices may be a little bit different, patterns may be slightly different, but for the most part, usually large structures like this are typically similar. Although we've had movement where, Bitfinex prices are a lot different and a lot higher, so structures could look different. So here's the thing, folks. Whenever I mention prices or trades or setups here in the Cryptosomniac community, make sure that you are on the right exchange, doing your own due diligence of price action or patterns on whatever exchange you're on. Okay, so with that being said, on the Bitstamp exchange, this is a falling wedge that was being created from the high of about 14,000 or 13,800 to the low that we put in right here, about 10,400. So it dropped like this, then it hit the second confirmation at the top, and then it hit the fourth confirmation at the bottom right here. Okay, all right, so now that we broke out of it, so what does that mean? Falling wedges are typically bullish reversal patterns where prices are kind of, what really happens is, this is your wedge, right? Prices somewhat enter this wedge, and then they tighten up as they go down like this, and this is a terrible analogy because prices don't go backwards. Let me draw it a little bit better. Okay, so I'm gonna draw it like this. Okay, just like this wedge right here, right? Okay, so really what happened was prices kept moving up and up and up, and then boom, it hit the top, and then they sort of start coiling up by creating lower highs and lower lows, right? And then usually what happens is this looks like a big bull flag, but really it's a falling wedge because prices are tightening, and then prices break out. Okay, why do they break out? It's because at a certain point down here near the apex of the wedge, enough supply has been dumped, and the bulls have essentially absorbed all the supply all through this range right here, and then there's nothing left to buy up, so then they just keep pushing prices up and out of the wedge. Okay, so that's why falling wedges are essentially bullish patterns. Okay, and now also with volume analysis, you will see that volume essentially declines, whether it's buy side or sell side volume, through this through the life of this wedge. So let's see if that's true. Okay, you can see right there, high volume right there, lower. I mean, overall it really declines, right? I mean, we can see this on a 4-hour chart too. You can see right there, volume has essentially declined, and now that the breakout has occurred, like right there, this is where you expect volume to start picking up. Okay, because for a true confirmed breakout, you need to break through critical resistance levels. Okay, so on the 2-hour chart, I pointed out yesterday to our advantage members that if the breakout happens here, look to take profits right near that pivot. Doesn't mean exactly right there, but right around it. You could see the high went to about 11,574 on this candle right there, and then we came back down. I would say prices are now trying to go up, test this same trend line as support, and then keep on moving up. Okay, so when you find falling wedges like this, all right, the best sort of way to look at a breakout or a chance to enter is the breakout outside the falling wedge like this. A confirmation of a 1-hour or 4-hour candle is best, and then the target of the wedge is usually the height of the first top to the bottom low, which is really the height of the wedge itself. And then you just take this and you map it out from the breakout spot, and that makes our target for the falling wedge around 14,300 or so, right there where I've marked it. Okay. Now this is where things get really interesting, folks. I'm basically saying that the breakout of this falling wedge is going to be a bit higher, right? All right. Before I get to why exactly this could be a potential breakout, to that target, let me sort of show you guys a different way of looking at this. Okay. So I'm gonna pull up this chart. Let's see where it is. Actually, maybe it's this one. Oh, maybe it's the daily. Too many charts, Sometimes you just get lost. Maybe it's this Bitfinex one right here. No. Maybe it's this Bitfinex one right here. No. Let's see. It's got to be one of these Bitfinex ones, Can't keep hiding from me. All right. There it is. Found it. All right. Okay, so here is where things get interesting. So remember what I just showed you, right? That the falling wedge makes the target of about 14,300. Okay. I had also shown you guys yesterday or 2 days ago that every time BTC has sort of hit this high, it's consolidated for a good 3 to 4 weeks in these like boxes right here that you see. Okay, I'm gonna just mark this one yellow too, or gold, whatever color that is. Anyway, so whatever consolidation that you see in every 3 to 4 weeks, then you see sort of a big run up after that, and then a sideways movement for a couple days, and then another big run up, and then another big consolidation, big run up, small sideways movement, big run up, and then a longer consolidation. Okay, so this is where we are right now, folks. Okay, we're in this next consolidation phase, or we might be here for about 3 to 4 weeks. Now, every time BTC has consolidated, okay, way back here in April, right, we went from a low of about 4,000 almost to a high of about over here was a high of 5,400. Okay, then we pulled back all the way to about 4,900. And then we sort of, broke out of what it seemed like a breakout over here. And we went to a high of about 56, 5,700, and then pulled back again a couple days. And this is where this pullback right here was this bearish divergence playing out. Okay. So every time we've done that, okay, first attempt at the break of resistance, nope, got rejected. RSI pulled back, price pulled back. Sideways movement right here, broke through, higher high right here as per this swing right here, but lower high on the RSI, so bearish divergence. Pulled back again, and then sweep on through. And then sideways consolidation, broke through, even over here. Okay, we went all the way to a high of about 8,300, came back, okay, and then broke out again, or at least what seemed to be a breakout, went to a high of about 9,000, and then boom, got rejected on the way down again. Lower high on the RSI, higher high on the price right there. So bearish divergence again. Now it looks like we might be doing the same thing right here. Okay, I'm not saying that this is a definitive fractal, but we've already done it twice. And BTC tends to be able to sort of trap the average retailer by, sort of going up, sideways, breaking through the previous range, and then getting rejected again, pulling back down with a higher low right there. Like this one is a higher low right there. And this one was a low put in, and then this is a higher low. Okay. So BTC tends to get most people trapped first in this first shakeout right there, and then once that happens, BTC goes all the way up here, comes back, puts in a higher low, and again people are fearing that, oh no, this is it, we're done, we're gonna break down again, and then boom, it just takes off. Okay, so remember what I said, the 14,300 target, right? If 14,300 were to break, that would be right around, you know, just about this area right there. Okay, so if prices were to head up to that level, right, that would be the perfect area, the 14,000, maybe even 14,300 target, and pull back down, put in a higher low, maybe around 11,500, maybe even 12,000, and then just keep on moving up and away over the next couple of weeks. Okay, so just something to keep in mind with, you know, what I'm looking at, and that would create the perfect sort of scenario and environment for this lower high on the RSI. Okay, so keep in mind in the next week we could print prices higher, right? But then eventually they'll pull back a little bit, and then you could even get your confirmation, right? If you want a true confirmation, you're looking for this higher low right here, and then this higher high, and this is where you can have your confirmation, or you could have had it right there, or you could have had it right there. Either way, you will get a couple of different confirmations. First one being, I would say, you know, this is another thing right here, okay? I'm gonna pull this RSI out. Okay, let's sort of get rid of everything. These two candles right here, folks, okay, let me show you what these are. These are called tweezer bottoms. All right, they look like this. Okay, tweezer bottom candles, they look like that. Okay, typically tweezer tops are the other way around, but tweezer bottoms, that's not a tower, we're not at tower bottoms right now, but tweezer bottoms. Okay, typically, why are tweezer bottoms created? Because prices were trying to get pressure to the downside, okay, and bulls consistently kept rejecting them from falling further, and they push prices up higher, because all of this right here, both these wicks right here, were fully absorbed by the demand that was just sitting right in this region. Okay, demand is excessively high in this area. All right, now what could obviously happen is, you know, prices could go up and then create another lower high and then come back down. Yes, that's very possible, but more often than not, you know, statistically, tweezer bottoms do mark at least a possibility of a reversal. Okay, and not only do they mark it with a possibility, but I think there are statistics behind, you know, what the probabilities are for the tweezer bottoms marking a reversal. Okay, so again, I'm at least somewhat confident that these tweezer bottoms were put in. We're in a consolidation phase. We just had a big shakeout of about 30+% that we have not had for a long time. See, we went from that high to this low of about 30%. Okay, in the entirety of the bull market in 2017, we had multiple 30% pullbacks. Okay, look over here. Okay, this is the 2017 bull run. That was about a 40% pullback, right? Over here from this top to this bottom, about 30%. Even down here, okay, from this top to this bottom, about 38%, right? So what I'm saying is that, you know, we're coming extremely close to that area where, you know, we did put in a 30% breakdown, and then now prices are looking to head back up towards, I don't know, it's essentially it's continuing momentum. Okay, because for the most part, folks, if we start looking at, you know, charts like this, where let me pull this out over here on the weekly. Okay, if we start looking at charts like this, I mean, this is still an excessively high momentum, you know, weekly chart of to the upside. Okay, after putting in this bottom right here of 3,100 all the way to this top, you know, we got rejected pretty hard. Yeah, I agree. But now the next real level to watch is first the break outside of this 11,500, 11,600 weekly area, which we put in 2018 February, right? Though we went past it, we closed right under it. So the first step is to go past this area and close above it on the weekly. 11,700 or 600 will be safe. Okay, and you can even see that once we start lining up the pivots right here, folks. Okay, let me show you guys why that same marker that I just showed you on the weekly is important right here as well. Check this out. Okay, look at where this pivot is on the 4 hour. Right there, 11,645 or so. Okay, let's just say 11,700 to be safe. All right, if prices climb above this area, I would be more bullish than I would, try to be bearish to the downside. Okay, after we break past this, then it's the 13,000 marker. I would actually say that probably this lower high right here around 12,400, 12,500 will probably also pose us a decent amount of resistance. But if you just go from pivot to resistance, I would say this is a good way to go about trading as well. Okay. I love using pivots because they're very useful. And also, if you use them in tangent with or in complement with VPVR right here, very useful. Okay, all of these are essentially nodes that give you an idea of where there's a large amount of open interest or previous support and resistance levels where there's high demand or high resistance or high supply rather. All right. Okay, so now you know markers to look for, right? And I even stated again in my Cryptosomniac community right here, Bitcoin analysis right here, that the levels to be watching as resistance, first one was 10,600 to 700, right? So as you can see right here, we were watching that area because we were trying to break out of this falling wedge right there. Okay, so once we broke out of that, all right, then the next level to watch is about 11,500 and then 12,500, and then we can talk about 13.8K. Okay, so guys, prices stair step from one level to another. So when people ask me that, where do you think price is going to go tomorrow? I have no idea. All right, and neither do you, and neither does anyone else. Price is going to do what it's going to do on whatever day it's going to do it. All right, technicals are about laying possibilities out, preparing for those situations, and then figuring out maybe the probabilities of some of these patterns that play within those possibilities. Okay, if you saw a bull flag playing out, there's no guarantee that the bull flag is going to break to the upside. You just have a statistical probability attached with the bull flag based on historical data. But historical data never points to a definitive direction. It just gives you some probabilities on your side and a possibility that it will break up to the upside. Okay, so stop trying to think that technicals are useless or they're some crystal ball sort of prediction. Technicals are not that hard if you start to understand the overall picture, how sort of that the human psychology plays into the market. Fear is driven into the market, greed is driven into the market, and even there, you don't even have to work that hard. You can go to this website called alternative.me, and you can look up the fear and greed index right here, folks. You can see that greed is ticking up again. People are becoming a little bit more bullish for Bitcoin. I tend to like the index right down here, somewhere around the 50s or 60s, low 60s. Why? Because I want to be able to buy the fear in a bullish uptrending market. All right, because people are more than often foolish and they keep thinking that just because price went lower, they just have to keep going lower and lower and lower. I mean, people wouldn't be happy if unless prices went to either 0 or 100,000. For them, the middle ground is just riddled with emotional sort of anxiety, constant panic, not knowing what to do because they have a lack of a game plan. And that's something, folks, that we do at the Cryptosomniac community is we help you develop game plans of how to be prepared for these possibilities and probabilities. If you go to a products page, and as I've stated before, if you buy the technical analysis course right here for $10, you can come get the free Advantage membership for 7 days. Okay, or you could just join Advantage straight up and have it for a month and give it a shot. Okay, plenty of people have tried it and have seen the results and the fruits of sort of what we teach, the trade setups that we have, whether we're going short or long, whether we trade options or futures or perpetuals, or we're just buying, spot BTC, meaning we just buy the asset itself or buy LTC or whatever, right? Whatever we're trading, okay? So you can see all these reviews right here, folks. This is just, the last week or two, right? Everything is right here, okay? So if you're watching these videos and you're not even thinking about joining, guys, at least give us a thumbs up, because we put in a lot of work into these videos. I do these every single morning. So do give us a shout out, share our videos, comment on them, give us a thumbs up, all right? So going back to the analysis, like I said, we were looking at that level right there, with the 10,800, and then, 11.5, 11.6 to break out of, then 12.5, then 13.8. So like I said, price likes to be able to stair step, okay? And you can even use this pivots indicator to do that, okay? You can just go to over here, right here on indicators and strategies, and just type in pivots. Very useful, okay? Another reason why I was fairly positive about price action sort of coming to this level, okay, is this is where things get fun, all right? 21 EMA and 30 EMA, okay? Check these out from all the way back here in February or even way over here in early February, right? We bounced off both the EMAs, 21 and 30, bounce, bounce, bounce. Even over here, bounced over here, bounced off the 30, over here, bounced off the 30 multiple times, and even over here, it looks like we bounced above and closed above both the 21 and the 30 EMA, hitting wicks on both of them, though, okay? You can see right there, right? So once we bounced off and moved away, I would at least expect, this bounce to hold, because it's held for so long. Guys, we've held this since February. We're now in July. That's March, April, May, June, July. So about 4.5, 5 months so far, right? You don't just break, 4.5, 5 months of consistent momentum, especially using some of these moving averages just randomly, right? There will be sort of signs that give it away, okay? Now, I would agree that the first sign right here could be, excuse me, it could very well be that this was a high-facing, gravestone doji, or, Morningstar, whichever one you want to call it. But you could see the follow weekly is a, pretty decent-sized bullish candle already, all right? And we're only about 3 days into this weekly. Like I said, if prices close above 11.6, 11.7 right here, above the weekly closings of this right here, I would say that's a very positive sign. But again, we have about 3 to 4 more days to go. So keep an eye on that, okay? If prices close lower than that, then I would be a little bit more fearful that prices could pull back a little bit more, okay? And it's also a possibility, folks, that during this week, the duration of this weekly candle, we could just go really high, put in another wick, and then come back down again. But then even then, I would say that when we have 2 big wicks like that poking up, that's essentially, taking out a lot of these orders that are sitting in this area as resistance. So that means this whole area as supply has become even weaker, okay? So that again speaks on the behalf of how strong the bullish momentum is, because you cannot have 2 high-facing wicks like this and expect just a sharp downside again, because what you're really doing is you're taking out the amount of supply remaining in this area, and the resistance has now just become weaker, which means the next follow-up weekly, especially if this bullish momentum were to continue, will be even easier to slice through this area, okay? So this is why I say that, in my opinion, I still don't see why things look scary, meaning that prices are just going to dump all the way to 7,000 or 6,000, whatever ridiculous number that people are saying, because the momentum is still continuing. Now, if on this weekly itself prices start to close lower, then I would say things are going to look a little bit more bleak, okay? Especially if this weekly closes below this area right here, as you can see. That would be around 9,600 or so. then I would say, all right, that means we might have a temporary shift in momentum. Prices may pull back a bit further, but how much further? Let's see, right? So here's sort of the run up that we've had from this low right here to this high. Okay, so far we did hit that 618 perfectly, as you can see, and we bounced off it. We even closed, or at least thinking about closing on the weekly. Let me see where that is. Okay, so I mapped out that fib from this low right here, about 7,400 or so, all the way to about 13.8. We hit that 618 fib, and you can see prices are now challenging that 382 fib on the upside, right? Okay, now let me go back to the weekly and show you. From this low right here all the way, okay, so let me put in this area right here to this high right here of 13.8, we essentially bounced off the 382 fib right there, right? You can see that right there. That's also a very positive sign in my opinion, okay? When you bounce off at 382 successfully, again, this is not closed yet, so we cannot say we've bounced off it successfully, but especially on the weekly, when you do see that this bounces off 382 successfully, very positive sign of how much bullish strength there is. You know, so the thing is, folks, whenever prices move up like this, the lower the retrace like this, that means that, you know, the bullish momentum isn't as strong, but you know, still the bulls could pick it up around this 618 fib and then push it further. The higher the fib where prices retrace like this and then keep on moving away, that speaks on the strength of the bulls. All right, I hope that makes sense. Okay, let's see. I mentioned the Tweezer bottoms. I mentioned this 618 level that I just showed you earlier. From 7,400 to that 13.8 high. I mentioned this 382 level. I don't know if there's a whole lot else to talk about. I talked about Bitcoin dominance for a little bit. Let me see where the 3-day chart is. Okay, so here's where BTC dominance is really just sort of taking off. And honestly, folks, if we look at this on a candle view, I bet this is like a bull flag or something. Yeah, you could see, like, you know, even over here, it's turning out to be potentially a bull flag. If the BTC market cap or market dominance goes higher, you know, the altcoin dominance will go down even further. Not that it's not already down, you could see, but it will go down even further. And this is sort of where I've looked at a lot of different alts over the past few weeks, and really don't see that much strength in alts yet. I'm not saying that, you know, like all of them are just going to die. I know there's going to be a handful, maybe even a select few that are going to, you know, pop off during alt season. I don't know when alt season is going to be, but I doubt that, you know, their death will just be put so quickly. But I would say a lot of them are just not going to do anything. Some of them, due to the sort of gambler mentality in the crypto space that's there, will probably, you know, pop off and, you know, go for those 50, 100% gains. But really, you know, those are just not sustainable, because honestly, really what happens during that mania is a majority of people are wrong. It's usually the bots and, you know, professionals who are able to make money in that market, because they've already been accumulating for a while. They'll have the courage to buy the capitulation on alts, and then they will also have the money to be able to drive it higher, only to sell it to you at a higher price. And typically what happens during that phase is BTC pulls back a little bit, alts run up. The people who, you know, keep looking at alts are waiting and waiting for a pullback, but then alts just keep running, and then they jump in at the high when the alts have run already. So then BTC sort of, you know, grinds back up, alts run down, and then, you know, those same people who bought it at the high, they sell lower to jump into BTC, and then BTC calms down or pulls back again, and then they jump back into alts. at an even higher price. So they sell at a loss, buying at a higher price, sell at a loss in terms of BTC US dollar, and then buying at a higher price at the alts again. That's usually the cycle of sort of how most retailers will operate during a alt season. So be careful and sort of think in satoshis. Okay, that's I guess the best phrase I could give you. Think in satoshis, and you won't have to worry about the alt season because you already know that Bitcoin has been giving you such great returns, and it's by far the safest asset when it comes to even pullbacks. When BTC pulls back like 5-10%, alt will pull back 20-30%, and you'll lose both Satoshi value and US dollar value, right? So at least over here, you could hope that BTC will go up a little bit higher and then regain you that dollar value. So you won't run, you won't lose two ways if you're with alts, okay? So just something to keep in mind, okay? Let's see how Ether is doing. And by the way, folks, I'm headed out on vacation today. So for the next few days, I won't be doing any videos whatsoever. I will be doing analysis here and there for my Advantage members. But try to take some time away from these markets too. If you have friends or family or things that you want to do in your own life, all right? These markets are 24/7. If you sort of pay attention to them all the time, you'll drive yourself crazy, okay? So prices of Ethereum are currently hovering right on the top of this, bullish, I don't know, it looks like a broadening wedge or a bull flag, whatever you want to call this area, but it's hovering literally on top of it, folks. And prices need to break, to the upside, or else if they break down, they'll go down further into the 260s or 240s level again. And that's not something that you want with Ether. So this is why it's sort of imperative for BTC to sort of keep climbing up and up towards 11.7, 12.4, and then 13.8 or so. Okay, so keep all the things in mind that I stated earlier about the bearish divergence, the tweezer bottoms that we saw on the daily, the fact that we bounced off the 21 EMA and the 30 EMA. Obviously, listen, you could easily short this right now because we are still under this pivot. Okay, so if you're looking to short this, your stop would be just above this wick right here, so about 11,650 or so. All right, so I'm just giving you guys an idea of you have different options. Okay, you could ride the trend of the 1 hour, 2 hour, 4 hour time frames, which is the smaller time frames, or you could ride the trend of the daily, in my opinion, which is still bullish. Okay, there's the daily right here. Okay, I don't know why that happens when I put on the pivots on the daily, but the daily is still trending up, folks. This is not, you cannot argue the fact that this is still a daily that's trending up. Okay, every time people have called for like the death when these kind of shakeouts happen, BTC just trends higher. Okay, it just proves all those bears wrong. So in the higher time frames like the daily, and even the weekly that I showed you guys earlier. Okay, where's the weekly? Oh, by the way, here's another positive sign on BTC. We are now above the pivot. If we close above this area on the daily, this is, in my opinion, a very positive sign. And if you want to go long, you could potentially put your stop right under the pivot. Although we did have these deep wicks right here, so I don't know if you'll get stopped out by a wick, but just something to keep in mind. Again, another reasoning why the pivot itself is holding now if BTC closes above this pivot on the daily candle, which is still got about 12 hours to go. Okay. The weekly time frame right here, even over here, we stayed above this weekly pivot, and now we're reaching towards that R1 pivot, which is about 12,900. Okay, so again, like I said, daily, weekly, even monthly, and quarterly, like there's a lot of positive signs going for BTC. You can even see the July month is already started off, you know, decently 3 days into July, and this looks like an already bullish candle. You wouldn't even think that we had such a massive drop, because this, you know, monthly candle sort of absorbs everything and encompasses everything in a month, and shows you guys at the end of the month that, hey, even though this happened, I didn't care, and I just kept going higher. All right, so every single high time frame is giving you very positive signs, and that's where, you know, I am still fairly positive. All right, now obviously I could be totally wrong, and prices could break down even further over the next, you know, say week, but for the most part, you know, you will get signs and signals that prices are about to break down further, especially if you know, something like this happens, where, let me go back to this chart right here. Okay, if the first sign I would say would happen is we not only close under this weekly right here, okay, the 11,600, but we close this candle on the weekly lower than 9,600. That would be, at least in my opinion, the first sign of you know, more, I guess, uncertainty. And then the next supports would probably be about, you know, 8,800, maybe even, you know, $8,200, $8,300. Okay, so keep that in mind if you're sort of a bit scared and you think that prices are going to go deeper, or you just want to wait for, you know, this weekly to close. Okay. All right, I'm gonna check out LTC real quick. A lot of people love LTC. So I did state that, you know, if LTC bounces off this red box successfully, I think prices of LTC are going to go higher. But even then, it all really depends on BTC, folks. If BTC does well, I think LTC will be just fine. I don't think there's going to be any issues, honestly. So I would say that LTC has a high possibility of going towards 140, and then if it reaches back up in this channel, it could go as high as, you know, anywhere between 180 and closer to $200. Okay. Again, that halving is coming close for LTC, so do be careful. You know, try not to buy too close to the halving, and also keep an eye on BTC and see what it's doing. Okay, so we went over a lot of different things. We went over you know, Tweezer bottoms, 2131 EMA, the falling wedge, the different weekly resistance and support levels, the pivots and resistance levels on different time frames. So you have a lot of information to keep in mind, folks. So I will be away for the next, you know, couple days. I will be in the advantage channels, mostly all the locked channels that you see right here. This is where all the magic happens. We also just opened up a options and margins trading channel right here. This is only for advantage members. A lot of this information, guys, is for advantage members. So if you are thinking about joining, go to cryptosomniac.com. Technical analysis course for $10 will get you 7 days for free, or you could just buy a month right here. All right, thank you guys so much. You know, you can check out these reviews on your own when you do join. There is a free Discord link that you will get for the free lounge, which is just, you know, the unlocked channels, which is community discussion, stock market chat, and forex chat, and that's really it. All right. All right, folks, take care, have fun, and for those of you in the US, have a happy 4th, drive safe, and yeah, take care, guys. Cheers.